Welcome to my channel and thanks for watching this video. And we have ended with one more very interesting and important week. So welcome you all to another session of USA Weekly Market Report to analyze what's about to happen in the upcoming week. Now, those who are regularly watching my videos on USA Weekly Market Report, I have been telling this thing for last 1 month that we have some serious problem as far as the trend is concerned, and this is nowhere looks like the downtrend has been over, and there are lots of ifs and buts. There are lots of moving parts that are impacting the trend. So let us discuss most of the things, or let us discuss all the important things that could probably impact the trend going forward. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, as you can see, we have ended with nearly 1000 points gone on Dow Jones. And let me tell you, this is just a small number. If you're looking in the chart, this does not even look like a big move. So let us first go through all the important headlines. Then we will start analyzing the chart one after another. Now, you can see there are lots of numbers because earning seasons are going on. So there are lots of numbers. There are central bank decision. Moving forward, you have the French election, and then the industrial data and the yields. Everything is saying their own story. But you need to understand that on one side, to tackle the inflation, the central banks are hiking the interest rate. But the problem for the inflation is not going to solve very easily, and interest rate for the time being, I'm not saying in the long term, but for the time being, is just adding fuel into the fire. Why? Because the geopolitical tensions are still there. Until and unless it gets solved, you are not going to get rid of it. For the simple reason, you can see the geopolitical tension or whatever is going on. They are the countries who are world exporter for agricultural products, who are world exporter for energy, and they are world exporter for oil as well. Okay, so until and unless this issue get resolved, it seems like they are not looking for a peace, they are looking for an interest rate hike. And until and unless there is a peace, until and unless this conflict eases, you can't get rid of this interest rate kind of thing. You keep on moving interest rate, but the problem is you have a scarcity. You have a scarcity of food, you have a scarcity of energy, and the prices will move on. It does not matter whether the interest rate is going up or down. Until and unless the geopolitical tension eases, you cannot get any advantage of these moves. That's for sure. And all the excesses, because if you are hiking the interest rate, and beyond a certain point, you will see most of the companies who are, or when the market call them as growth stocks, they are going to feel the heat because the cost of capital will rise rapidly across the globe. And those who have debts on their books, those who are borrowing money to fund their business, they will be in a big problem. So these are some of the things I need not to go to everything, but these are some of the things which you need to know. Until and unless the moral of the story is, until and unless there is a peace, there is a negotiation between all the countries regarding the ongoing crisis, and it's not going to be handled by monetary or fiscal measures. It's not going to happen, and you can see now the aid package. I mean, seriously, if this is for their food, for their livelihood, then it is more than welcome. But it is, if it is to fund the military, I'm not saying, I'm not taking one side or the another, but the thing is, both the side need to be stopped at some point. Otherwise, the entire globe will face the heat, and it is indeed facing the heat. So that's where the problem lies. So now let's go and see what the last Friday was all about and what the market has been indicating. So 2.82 percentage fall in Dow Jones, 981 points. Then we have NASDAQ gone by more than 2.55%. Then we have S&P, which is down by nearly 2.77%. Gold is down. I don't really bother about gold because gold will keep its foot or hold its foot very strong, because it's not going to move. $30-40 worth of move on both the side is a mere consolidation. Oil is very steady. The US 10-year yield is very near to $3, 3%, and I've been saying this, I think, for the last 2 months. And then VIX spiked up 24% in a single day, and it can happen on any day, and you can see here in front of you. Now, if you are looking at commodities, everything started falling, but this 1%, 2% losses or 0.9% does not make any big difference. This is just a trading move, nothing else. Interest rates are increasing. The short-term interest rates are increasing, and most importantly, the dollar index. It's been there at 100 now. With a single dollar move, as you can see, can cost you 1,000 points in Dow Jones. Okay, now it is officially at 101.12, which means the next move will be or in between 103 and $104. So keep this thing in your mind. Otherwise, you will be in a big problem, because the dollar will eventually get you. So this is the chart for Dow Jones Industrial Average, and I'm talking about the weekly chart. And I've been saying this thing again and again and again. The chart, and more specifically the long-term chart, never lies. Okay, now you can see a very, very traditional kind of move is happening, and if you just focus on this highlighted section, all the moving averages are there, and for the last 3-4 weeks Dow Jones never crossed the moving averages. So 34,900 and 35,000, it went there, but it falls. And yesterday it finally makes its move. Now the next technical support we have here is the 100-day moving average. Okay, so this is what do we have here. So you have two different support levels to look at. You have 33,196 and you have 32,284. So this is what we are looking at as far as the next two support is concerned. And as you can see, this looks like Dow Jones is indeed trading in between a range. As I've told you that this move, even a 1,000-point move, looks like a very small thing. So the actual range we have here 32,284 on the downside, which the stock has tested in February 2022, and 36,700 on the upside. Okay, so this is what we are looking at as far as the Dow Jones is concerned. Now, going back to the NASDAQ, where you can find most of the growth stock, it is very clear that NASDAQ is the weak link and it will face the heat, because in the weekly chart of NASDAQ, it has already broken 20-day, 50-day, and even 100-day simple moving average. I'm not using exponential, I'm using the simple moving average because they are the slow ones. Exponential can move very fast. So here we are. So this is what we have here, and for NASDAQ, it is trading near the lowest end of the range, and the next two very important support will be 12,618 and 12,494, or I would say 12,490. But the way this has happened, the way NASDAQ has moved, it is saying that it is moving towards the 200-day simple moving average for the weekly chart, which is at or near 10,600. It will obviously move along with the price, but 10,600, 10,700 is going to be your next support, which you need to look at. Okay, and if that happens, so technically it will be a 34% correction in the NASDAQ, and it's a fair amount of possibility that you can see moving forward. So 12,490 is going to be your last resort. Now, the most important of all is dollar index. I've been talking about dollar index, and the kind of enormous strength it is showing is indeed phenomenal. Okay, it's been trading in a range, and this move has indeed happened in the last, as you can see, the downside in 2021, 2020-21. So from there, I mean, a 13% move in a span of one and a half year. It's not even 1.5 year. It's somewhere like 1 year, 2 months, 3 months. But the move is phenomenal. Indeed, the move is phenomenal, because the chart, what the chart is saying, you have technically crossed 101, 100. So the next two targets that we're gonna look at will be 103 and 104. Yes, so this is what we have here, and just pray that it won't move beyond 104. Otherwise, brace yourself for something very phenomenal, and which will be extremely bad. When I'm saying extremely bad, mind my words. I'm not at all fudge my words, and I'm very serious about that, because what will happen after $104, you can't even imagine, and you will see market tumble 10%. That's a fair possibility, because if dollar moves beyond 104, then you are here for a move towards 106, and not only that, you are here for a move towards 120 as well. So these are very serious things that are about to happen. So I would just pray. I'm not talking about I'm very hopeful or something, because it's a time when none as a global leader, is showing the sanity. They are all doing their business, and nobody is talking about the people. Aid does not give you a peace. Okay, so aid is just give you the food or meal for the day, but it will not give back the life what you have enjoyed or what is your basic right. So I am simply hoping or praying that this is not the start of something very bad for equity markets. Okay, I hope that 104 will be the last thing that one can expect, because if it does not matter, when price started moving up, because stock market is a future discounting machine, and if things looks uncertain, if things does not go back to normal, if there is no certainty, stock market will factor each and everything much faster than one can expect. So, be very, very alert about what's going on in the market. And, you need not to trust anybody. You just focus on the price. What's happening in front of you, just open the screen and just see what the price is telling you. You need not to listen about what some politicians are telling you, what the central bank is telling you, because price will move much faster than anybody is saying. It does not matter whoever that person may be, but the price will say you the best. So this is the end of the video. Thanks for